Hello, friends. Myself, Saurav. Again, great pleasure to host a session for all of you, and I'm really happy to receive all your questions. I'll quickly share the list of the questions and I'll try to answer as many questions which is possible as we couldn't do during that point in between the session due to time constraint. Okay. So Shaik has a question which says how to close a home loan with less tenure and interest. So again, Shaik, it all depends upon the overall cash flow liquidity which you have in terms of repayment of loan. So let's say maybe you have taken a loan for 20 years. That's okay. But every year, once you get get a lump sum payment for down payment, or let's say once you get a lump sum payment out of your bonus, etc. So do utilize that, and you can pay off that principal and reduce your time. So maybe you can maintain the same EMI but reduce the tenure of the loan with your bank. So that is something which you can do in order to manage your housing loan. Next question is FD helps to manage inflation. Meanwhile, equity may have risk. So again, FD doesn't help to manage inflation. If you look at FD in the longer run, they're not able to beat inflation. In long run, post-tax FD gives you 5% return, whereas inflation is around 8 to 9% return. So FD is a good product for short term. Any financial goals which you have less than 1 year, 2 year, 3 years is okay. So from a longer term perspective, if you look from a long term perspective, equity has a lesser risk. It has a lesser probability of losses, maybe around 0.5 or 0.1%. But from a longer term perspective, equity is one of the asset class which has the potential to beat inflation and give you higher return. Which is the best platform? Again, there are a lot of platforms like Zerodha, Coin, and ET Money, etc. More than platforms, see what matters is what kind of a funds you are choosing. So if you want to create, you want to invest in SIPs, create a diversified portfolio where you have a mix of large, mid, small, flexi cap funds. Okay. So platform honestly is just a way where your payment gets debited, inflow and outflow. But what matter is where you are investing, that asset class will generate returns for you. Naveen has a question, which is the best short-term investment options? So again, Naveen, honestly, FDs, RDs are maybe from within the mutual funds, you have liquid funds, which is the best short-term investment options. But from a long-term perspective, don't invest in FDs and RDs because they might not generate best of the returns. Which sector is best investment? If you look at a sectoral perspective, again, infrastructure, manufacturing, defense, this is where government is putting a lot of stress because over last 10, 15 years, from a tech perspective, India has become really strong. And that technical skills we need to utilize in order to build our manufacturing abilities. I think manufacture would be the theme. Whereas again, when it comes to manufacturing, a lot of allied sectors are there, as I said, power, defense, infra, and a lot of equipment manufacturing, etc. So all those things will form a part of it. Okay. How do you see market perform in 2024? Okay, 2024 definitely is an election year. There will be some volatility. So last year, 23 has been really superb. So in my view, 2024 would be a year of consolidation, whereas maybe we can see markets at the same level or maybe slightly higher. But yeah, if you have a 3 to 5 year horizon, Naveen, definitely we see markets at a much, much better, generating much, much better, double-digit return for all of us. How to evaluate and identify the right mutual funds? So when we talk about mutual funds, see what you need to ensure that what is the tenure for which you wanted to invest. So let's say if your tenure is more than 5 years and you want to create a basket, so have a mix of large, mid, small, flexi. So have a four, five, I would say categories within the mutual funds. And how to evaluate is just compare with the category average. So let's say if I have purchased, if I'm investing in one mid cap fund, so there are 25 mid cap funds. What is the category average? Let's say if the category average is 15%, your fund is delivering 16, 17, 18, or maybe up to 15 is okay. But let's say if category average is 15, your fund is generating 10% return. That is where you need to work, change that fund and move your funds, let's say, to the right fund house. So once in a year, you need to do this exercise, and then certainly you would see that yes, you are on the basically sitting on the right funds. Okay, so that is really important. Sudha has one question, which is uh, equity is undoubtedly the best instrument for, let's say, generating higher ROI, but it always tough to choose the right and stable. Yeah, that is why, Sudha, I would advise you to stick to mutual funds when it comes to equities because there are professional fund managers who are doing this activity day to day, interacting with the companies. and doing a proper due diligence. So, and our job would be to select, let's say, one of the select few mutual funds which are, let's say, performing more consistently. So that would be the best option for any retail investors, because being in a full-time job, you can't keep a track of your, let's say, equity stocks on day-to-day basis. So that's really important. Okay, so you have two LIC endowment plans, continue. So again, definitely returns are lesser than inflation, but whatever it is, continue. They'll give you 6-7% return. Consider it as a part of your employee provident fund, like EPF only, but don't increase your consideration. I would say don't increase any more, or let's say don't have any more policies. Okay. Karthik has question how to choose and read term insurance. Okay, so now term is very, very simple, Karthik. What RBI has, or let's not RBI, what IRD has mandated that if any investors has, any policy holder has paid a premium of 3 years or more, claim cannot be rejected unless there is a very, very serious ground. So term is very simple. Let's say you are currently at the age of 30, you want to take a term cover up to the age of 60. So you pay every yearly premium. If anything happens to you before 60, if there is any life loss, your nominee will get the entire corpus. If it is, it's just like annual premium which you pay for your health insurance or your car insurance. Okay, so again, you can choose any company. Honestly, try to choose a brand which you feel that it will last for next 20, 30 years. Sometimes we choose a very smaller companies, those companies sell off their business to other partners. So there you might face an issue. But if you choose established brands, so which you feel that, okay, these brands will stay in exist for next 20, 30 years, I think that's okay. There's nothing specific about, let's say, any brand, etc. Sayantan has a question. Can I follow the HNI portfolio for purchasing stocks at a lower P and PB value? Again, lower P doesn't always yield higher returns. The last 15, 20 years, all the PSU stocks were available at a lower P and lower book value, but again, they didn't run up. It's just that after 15, 20 years, almost 10, 15 years, those stocks are now going up and performing well. So again, the idea is to select companies which has a good growth potential. Because see, any company which has a good growth potential, you'll very rarely you'll get at a cheaper price. But the idea is to stick on companies where the growth is more stable, because eventually market will chase for stocks which are growing. Okay. How to use credit card wisely, sir? Just invest, or I would say just use the credit card to the extent you feel that, okay, that balance is there in your savings account. Okay, so just use card so that you can utilize those points, etc. Don't use credit for the purpose of taking the credit. Okay. How to plan early retirement? Will it be wise amount? What will be the wise amount? So again, depending upon your household expenses, Vinod, you need to work it out. So let's say if today my household expense is 50,000 per month. Okay, annually it is 6 lakh rupees. So what happens in next 10 years, my expenses would double. Okay, so in that case, my household expenses would be 12 lakh rupees per annum. So in order to get the 12 lakh rupees per annum, what amount should I be investing? Okay. So ideally, let's say if you have a 2 CR corpus, just to give you an example, okay. So let's say if you have a 2 CR corpus and you withdraw 7% per month out of that corpus, okay, you withdraw 7% per month out of that per annum. And if I take monthly, it is 1 lakh 15,000. So again, talking about, let's say if you have a 6 lakh household expenses now, after 10 years, it would certainly double. It would be close to 12 lakh rupees. So just to give a layman example, our ideal target corpus should be close to 2 CR for that purpose, so that you can maintain the same lifestyle. Again, which tax regime is better, Suchi, depends upon your overall CTC, what kind of an exemptions you are utilizing it. So again, for that, maybe we can connect one-on-one and we can see, considering your salary, where exactly it is placed. Okay. Jesse, how to close home loan early is just that whatever you save every month, just collate it, and once in a year, just top up your, housing loan, so that you reduce your overall tenure and you get rid of your housing loan at a much earlier stage. Okay. I think how to close home loan. This is just a repetitive questions. I've handled it. Vinay, what is the correct and the best mutual funds for SIP for long term? Again, finding correct and the best. I would say you need to select funds which are more consistent. So let's say if I am doing a 10K SIP, I would do 2000 in large cap, 2000 in a mid cap fund, 2000 in a small cap, 2000 in a multi cap fund. So the idea is to split, because in 10 years time, sometimes you would see large cap doing well, sometimes you would see mid doing well, sometimes you would do small doing well. So it's always better that you split and take it up. Okay. How do you have the list of mutual funds which is safe? And again, that is simply based on research, Vinay, and that is what we do day in and day out, identifying funds which are consistent, identifying funds which are above their benchmark. So again, you can reach out to us, let's say in terms of considering your risk appetite, maybe we can recommend certain funds to you. Okay. Rahul, okay, will declare while declaring in tax NPS and APY, which section does it come? So NPS comes under 80 CCD, that's National Pension Scheme. APY comes under Section 80C. It's like a normal pension plan, and NPS is a special pension plan, NPS, which they have carved out of a new section, Section 80 CCD. Okay. The amount of term insurance, Deva has a question. So it's a very interesting question, Deva. In my view, it should be 20 times 20x of your household expenses. Okay, it should be 20 times of my household expenses. Okay, 20x of my household expenses, not income. If you go and ask any person, they'll tell you it is 20 times of your income which you can take. That's the maximum amount which you can avail. But it is 20 times of your household expenses. Okay. So if my household expenses annually, let's say, is 6 lakh rupees, 6 lakh at 20 times is 1.2 CR. That should be the coverage I should be having. Prabhu is having a question. My term insurance with LIC has elapsed and I don't want to continue that. Please advise. So alternatively, if you want to have a term plan, you can take with Tata, HDFC, all those brands, as I said, which is good enough, which we feel that they will connect, that those brands will be there from a longer term perspective. Okay. Thanks, Prabhu. You are following our Connect magazine. Thank you. Thanks a lot. Again, we'll continue to bring some more ideas, endeavors towards making it more robust and strong. Okay. I think Vinod, I have answered the question. Okay. What about systematic invest? You can do, Ravi, systematic investment in equities. You can do, but provided that you just do the due diligence of the equities or the shares which you are doing. So, in my view, usually what I keep advising my clients, first thing you should have is employee provident fund, gold bond, equity mutual funds. Then, if you still have more money, do equity SIPs and do real estate, etc. So just go step up the ladder. Okay. So how much percentage to invest in large, mid, and small? Generally, try and make it equal. Let's not make it very complicated. If you have large, mid, small, flexi, multi, just make it 25% each, just to make it very simple. Okay, Karan has one question, that how to uh, record stock market losses and offset is. So it's very simple. Whatever loss you have booked, you have an option to carry it forward, or you can set off against the profit within the same financial year. Or there is a loss, when you file your income tax return, there is an option, you mention your loss and you can carry forward for next 7 years. So next 7 years, whatever profits you will have, it will get adjusted accordingly, Karan. Okay. Venkateshwara, what is the avenue for creating a regular passive income in addition of salary? Again, very simple, sir. 20% of your take home salary you should invest, and invest in diversified asset class. As I said, EPF, gold, long term mutual funds. And again, if you have some more money, you can do in equities, etc. So the idea is to diversify. As Robert Kiyosaki has said in his book Rich Dad Poor Dad, 20% of your take home salary, if you can invest for next 15 years, you will create a source of passive income for yourself. Okay. Ajay, capital gain, long term, short term on view. Debt mutual funds, it is fully taxable. Returns from this financial years, only in equities you get long term and short term. Anything less than 1 year is short term, anything more than 1 year is long term. Okay. Abhishek Kumar, it's not more risk, more return. Abhishek, it's more to understand, if you are investing into equities from a longer term perspective, you have a very lesser probability of having losses. So this is normally what has been told to us, ज़्यादा risk लेने से ज़्यादा return आता है, ऐसा नहीं है. Okay, ज़्यादा risk, if you do invest in crypto, again, it can become zero also. Okay, so idea is that you understand what is the kind of calculated risk you are taking, and risk is always based upon time horizon. So if I am doing an FD for a 20 years perspective, I think that is very risky, because it will not be able to beat inflation. Okay, so again, FDs, as I said, is good for short term. For long term, your equities and other funds are, good to diversify. Yeah, please explain. I think there is one more question for Abhishek. Okay, what is LIC policy does not grow in the longer run? See, again, that as I said, the expenses in policies are really very high. So again, it doesn't make sense for us to invest. But whatever you have invested, just hold on to it. Again, it doesn't make sense to redeem also, because if you redeem, you'll not even get the value which you have invested. Okay. Please explain the old tax slab and the new tax slab. Uh, so again, Ria, it's a complete different session on the tax planning. So if you need any specific inputs on, let's say, pertaining to HRA, etc., I'll be happy to do that for you. Okay. So Naveen, what is the best short-term option, and which sector is best during the current? I think I've talked about it. Yeah, it's just a repetition. Okay. Venkata is asking, is it good to opt for a higher pension? Trust me, it doesn't make much of a sense to opt for a higher pension, because by the time you retire, that is a point where you can actually decide that, okay, this is the amount which I need for my retirement planning in hand, and this is the amount I can park in a pension fund. So you have an option to park the amount in the pension fund at that time also. So don't be in a hurry. I would say better decide it at a later stage. Okay. Submission is not needed. Uh, 1 minute. I think where is the question? Hmm. If I opt for a new tax regime, hope tax submission is, yeah. So if you opt for a new tax regime, you don't need to submit, sir, any documents as such. Okay, only NPS is there that gets considered. So there's nothing to worry about it. Okay, that will automatically be taken into consideration. Okay. So Pia has one question. How can we earn a second monthly income? Again, as I said, 20% of your take-home salary you should invest. Akash, if I invest in PPF, should I invest in NPS? So yes, you can invest in NPS because it gives you a very specific exemption, additional exemption of 50,000 self-contribution, 10% of your basic salary to your employer. NPS is a good product from a longer term perspective. If you invest, I think 10-12% return you can comfortably make. Whereas in PPF, there's a potential to give you 7% return. And government can also reduce the PPF interest rate. NPS is linked to market. So if the fund does well, definitely we'll get better returns from a longer term perspective. How much return? So in debt funds or liquid funds, Satish, returns are around 6-7%, not more than that. Any platform you can choose. Again, it doesn't matter. Okay, whatever platform you want to use, you can use that. So we also have our own platform, Magnum Invest. Again, so whatever you want to use, grow, etc., you can use that. That's not a problem. Okay. Any other way to increase our money other than FDs? Definitely, as I said, SIPs are one of the best format. Gold bonds, RBI approved, that's the best format. So you sometimes Reserve Bank of India also comes up with their bond. That's also a different format. The different options you can explore to diversify, your investments. Okay. So RD again, Chitra, you can have it in your bank itself. It doesn't make sense now to open in a post office because it's very easier for to do in banks. Okay. So what is the best option to save money? As I said, employee provident fund is a very good option, followed by gold bonds, followed by asset allocation in different mutual funds, etc. So you can diversify and you can do that. Okay. How to evaluate and identify right mutual funds? I think I've already answered that. Arun has some question. What is the exemption limit for LTCG? Profits up to 1 lakh rupees, Arun, is exempted. Beyond 1 lakh rupees, we have to pay 10% taxes. Okay. So profits up to 1 lakh is exempted every year. Beyond that, the LTCG tax is 10%. Okay. Mr. Bhaskar is having with what will be the investment options where we can invest. I think we have I think the same questions, more repetitive, where again invest in a diversified asset class as the best format. Okay. I'm 39 years of age. I have took all my savings to pay the home loan. Now do I need Now I do not have any savings except PPF. So again, the idea is I can understand normally, housing loan is something which eats up most of our investment. So just kickstart your investment, sir. Even if it's a 10 years, it's okay. Whatever amount you're saving per month, start investing. And because it's a 10-year option, you need to be aggressive. When it comes to aggressive, I would advise you 70-75% you need to put into SIPs through mutual funds, 15-20% into equities, and balance 10-15% you can put it in fixed income or debt. Because the tenure is less, and definitely you need to have a decent amount of corpus for your retirement planning. So you need to be a bit aggressive. Okay. So Rohit, 15K you want to invest per month for your kids' future. So simply, to be very honest, just distribute across two different basket. One, 50% you put it in either, Sukanya Samriddhi if she's a girl child, let's say 7,500 do there and 7,500 invest into SIPs. Why into mutual funds or equities rather than putting everything into Sukanya? Because education is one sector जहाँ पे inflation 10% है. So EPF, Sukanya or EPF will give you 7%, 8%, and your SIPs have the potential to give you 12 to 15%. So on an average, you'll be able to create a corpus for her education or marriage, whatever is the purpose you wanted to do. Okay. Venkat, I start contributing to NPS 3 years back with 50K per year total contribution. As I said, Venkat, your option is wrong. You have chosen, I think, a conservative option. I have also told during the session, please shift from conservative to aggressive option. Then only I think your returns will increase. Okay. Term, I think we have discussed it. It is always advisable, Shobha, to take a medical policy separate. That's really important because once you leave a company or intermediary, when you join another company, there is a break. So in that time, you are completely left with no insurance. So please do that. Okay. So Vidya wants to know about SIP. So SIP is very simple, Vidya. It's a systematic investment plan. Just like you do a recurring deposit in a bank. आप बैंक में जाते हो, you start a recurring deposit, let's say of 10,000 rupees per month for 3 years, 5 years. Similar manner, you invest through an SIP every month, 5K, 10K into a one fund, let's say one mutual fund. Why SIP is better in mutual funds? Because in mutual funds, price moves up and down. Okay, and when you do SIP every month, you capture all the highs and lows and you are able to generate a much better returns. Okay. What Mohan? Yeah, gold is very good. As I said, Mohan, if you want to invest in gold, sovereign gold bond of Reserve Bank of India, that's the best format. Because in sovereign gold bond, returns are completely tax free. So whatever we generate post-tax returns is much higher as compared to gold ETF and other form of investing into gold. Okay. How to choose what to choose close a home loan early. So don't be in a hurry to repay your housing loan because housing loan comes at a 7-8%, 8.5%, whereas your SIPs have the potential to give you 12 to 15% return. I would say parallelly keep your housing loan and EMI, dono ko parallelly, just run it. Sometimes when your salary is hikes takes place, or let's say you get a lump sum money in the form of a bonus, that sometime depending upon the market situation you can utilize in terms of repaying your housing loan. That don't be in a too hurry to repay because housing loan also gives you a tax advantage. Okay. Can I follow the HNI portfolio? You can follow the HNI portfolio, Shantan, for purchasing stock. It's just that wait for the right time because normally once they would have purchased, the market price goes up very, very high. So the idea is to wait for the right time or buy slowly so that again you get those desired returns accordingly. Okay. I hope I am able to answer most of your queries. If there's still anything which is left out, I'll simply, drop in my email ID and mobile number. You can just text me. I'll be happy to take your query. Okay. So my mobile is 98360 43827. You can drop in any query you have. I'll be happy to take it up. And my email is sourabia@magnumfinvest.in. Okay. So you can reach out. Website is also magnumfinvest.in. In case you wanted to have any query, you can reach out there. I'll be happy to take all your questions. That's not a problem. Okay, perfect. I hope I've been able to answer most of your questions. Still anything is left out, do reach out to us. We'll be happy to take it up. Thank you.